Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.
With the copper price hitting $10,000 per ton again, and the US president wanting more domestic copper supply, there has perhaps never been a better time to have an advanced stage copper development project in the United States, and that is exactly what Arizona Sonoran Copper has. Hello and welcome to Kitco Mining here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me today is George Ogilvie, President and CEO of Arizona Sonoran Copper. George, welcome back to Kitco.
Thank you, Paul.
Let's start at the top with the political aspect. A significant price arbitrage opened up this year between the COMEX and LME copper prices on the fear that the US president would impose tariffs on copper. When the tariffs came, it was on copper semis and not on the primary metal or raw material, which seemed to have surprised the market. What is your interpretation of what happened there?
Yeah, well, I mean, obviously there was a lot of physical metal being moved into COMEX ahead of perceived tariffs. They never transpired, and there was just an unwinding of the arbitrage, which was very peculiar because it was in the favor of COMEX. We normally don't see that. We get asked a lot of questions on how that would have affected us, given we'll be producing copper cathode in the US and probably selling our product into the COMEX market. It would have been wonderful if we could have built that into the PFS, but at this moment in time, we're using long-term consensus prices built from LME pricing, which is fairly standard. We believe we're going to have a very robust project based on that. And if we put this into production in the next 3 to 4 years' time, and we actually happen to see those arbitrage high prices coming back for COMEX, then obviously that's going to be the cherry on the cake and create some significant additional value for the shareholders of the company. So it would be a real nice to have, but we don't build that into any of our plans.
Some of the narratives in the copper space are that there's a long-term supply deficit coming. Another one is that the incentive pricing isn't there for copper developers, for copper majors to build out new capacity. To what extent are those elements true or not?
Well, they're certainly very true within the United States. Only 60 to 70% of the copper within the US is produced domestically. There's still 500 to 600,000 tons of copper imported into the country on an annual basis that could potentially down the line obviously be exposed to tariffs. And the biggest issue as well I see within the United States is that there's actually only 2 working smelters at this juncture in time. And in a lot of instances, the copper, when it's actually found, it's in a sulfide form, which typically requires a flotation mill, is in a concentrate form, and then it has to go off for further smelting and refining. And typically those smelters and refining units sit in Asia, and in particular China, and then it's then sold back to the West or the US, obviously at substantial profits. So there's definitely challenges within the United States, not just for gaining access to more copper, but I think the processing side of the business is obviously going to have to be resolved as well.
Now, people think it's difficult enough permitting a copper mine. Permitting a smelter would be a whole different thing in terms of the environmental aspects and public hearings, et cetera, et cetera. Is it realistic for the United States to increase its smelter capacity?
Well, there is a third smelter that's on care and maintenance at the moment. There's been talk over the last couple of years that smelter would be potentially reactivated. It's not going to address the current 600,000 ton deficit, but it could potentially help. I think under this administration, with time, there certainly could be an ability to bring in additional smelting capacity if it's put on, federal lands with support of the federal government. But it's really the time. And obviously, this administration has another 3.5 years before there's another election. And if then the next candidate coming in is a Democrat, then everything goes back to square one. And I would say the likelihood of addressing that challenge probably becomes minimized.
Well, the current US administration wants to stimulate more copper cathode production, refined copper that can readily be used by industry, such as you're looking to produce at Cactus. How much wind does that put into your sails?
Well, it puts a tremendous amount of wind in our sails. I mean, obviously, we've been speaking to various federal agencies and US EXIM who potentially could provide some form of project financing for the project, be it through government funds or grants or loans, et cetera, et cetera. So we're definitely pursuing that as part of the project financing. We've actually been approached by quite a significant amount of strategics as well who, look to secure copper cathode from within country, because obviously there's an inherent risk if you're relying on, supply chains from other areas of the world that potentially are not as safe as the United States. So Arizona Sonoran, we're in a very fortunate and lucky position that we're producing this copper cathode in Arizona, which is known as the Copper State.
Now, you're working on a pre-feasibility study, and beyond that, a feasibility study. So is it a bit preliminary for you to be looking at project financing, or are you starting to cast the net, as it were?
No, we're starting the process now. The process typically can take anywhere from 9 to sort of 15 months. We've engaged Hannam Partners out of London in the UK as a financial advisor. We've got about a dozen groups right now signed up under an NDA about to come into our data room in early October. And then over the course of the next year, as we complete the various studies, get the final permits in place and advance towards the bankable feasibility study in the second half of next year, we believe at that point in time we'll be at a point to announce that the project financing is actually in place. And, one of the big aspects of that is that typically the finances will want to bring in an independent engineer who starts going through all the ESG information and all the technical reports to ensure that they're, very credible and the numbers that we're presenting are actually executable on.
Now, another thing that potentially could add wind to the sails is the announcement this morning that Anglo American is to merge with Teck Resources in a $53 billion merger transaction, very much focused on copper. I imagine that's going to bring a lot of attention to the copper sector.
Oh, absolutely. I mean, we've already received a lot of inbound calls about, our project, and obviously it's very timely that we're here at the Precious Metals conference this week. So I think as the news sinks in and people, realize the magnitude of this deal, I think it's going to raise the spectre of copper development stories, particularly those in very safe jurisdictions that have near-term production and are actually executable.
Does that add an element of, increasing the scarcity of projects and availability of projects? And in this particular context, scarcity could result in higher valuation?
Oh, absolutely. I mean, I think, and obviously I'm biased, but, Arizona Sonoran on private land, former producing mine, significantly permitted, access to water, strong social license, copper cathode being produced, low capital intensity, wonderful infrastructure in the area. I mean, these are attributes that a lot of other copper development stories out there don't have. And I believe on the back of a robust PFS, which, will be due shortly, I think there's a significant re-rate in the company, and people are going to see that this is absolutely a project that is executable and will be in production in the next 2 to 3 years' time.
Well, politics aside, it's been a big year for the company. You brought down some of the royalties on the project. You've acquired some land that you'll need for the project. You've completed the pre-feasibility study drilling. You started the feasibility drilling. What do you think has been perhaps the most significant catalyst for the company that you've achieved so far this year?
Well, believe it or not, bringing in Hudbay as an investor in the company, I think has been a huge catalyst. They conducted 4 months of due diligence last year, and Hudbay is known as being a very good mine operator, a very good mine builder. They've got a great reputation. And I think that gave the company credibility and obviously some confidence in the project and the management team. And I think on the back of that, the market started to get really comfortable that this, as a project, as I've said before, is actually executable on. So that was a big catalyst for us. And then on the back of that, buying down the royalties is really a very strong statement from the management about our confidence in the project and our intent to actually put this into production.
Are you able to give an indication of how much value buying down that royalty creates in terms of how much it will reduce your costs in a production scenario?
Well, we were running our models last year at $3.90 a pound of copper, and buying those royalties back added tens of millions of dollars of accretion for the shareholders of the company. So it made sense at $3.90. Of course, copper today is trading around $4.50, so it's even more accretive. But, we've got an asset here that initially will have a mine life between 20 and 30 years with additional sulfides in the ground and probably high potential for further exploration success. And if the pundits are right that the copper price is going significantly higher based on the supply and demand fundamentals, when you start to consider copper prices at $5, $6, $7, $8 a pound, we're talking numbers in the hundreds of millions of dollars of accretion to the shareholders of the company and not the royalty companies.
Your share price is up 60% over the last year. You've now got a market capitalization of, let's say, 460 million Canadian dollars. You recently raised, or early this year, you raised 80 million Canadian dollars. That's perhaps the biggest financing you've done so far. That brought in, you mentioned Hudbay, they've got a 9.9% stake. Rio Tinto's Newton also participated there. It seems that the market is starting to believe that this is going to happen, that Cactus is going to happen. They're starting to adequately fund you to get through those final steps, the PFS and then the feasibility. That must be very gratifying. What are the next big steps? When can we expect to see the pre-feasibility study and later on the feasibility?
Well, at the end of this month, I'm scheduled to go to the board to present the pre-feasibility study to the technical committee and the board, assuming that they give me the green light and they're satisfied with the numbers. Shortly after that meeting, we should see the numbers coming to the market, which, as you've pointed out, I think is going to be another significant catalyst for the project. I mean, we're delighted that the share price is up some 60 to 70% year to date, but at a $350 million US market cap company, potentially on a $2 billion NPV project, we'd still be trading at under 0.2 times price to NAV based on our numbers, not the analysts who have us around 0.3. Our peers are trading between 0.3 and 0.8 times price to NAV, and I think there's another re-rate coming between now and the end of the year. And I think one could argue, because of all the points we just raised about the infrastructure, the permits, the water, brownfield site, Cathode, it's in Arizona, we should actually demand a premium valuation. And therefore, I think there's a significant re-rate coming in time.
Why do you think your valuation has been, let's say, held back so much, given all the positives that you've mentioned that we've talked about, given the positive environment around it, which is out of your control, but obviously you benefit from, and given, this morning, as I mentioned, the big transaction, $53 billion copper-focused transaction, why is the market so slow to realize the value that you're sitting on?
Well, it's a great question. I don't quite know the answer, but we've discussed that many, many times internally. And at the moment, we believe that when the project initially came to the market in early 2021, it was the movement of a historical stockpile. It was the layback on a tired old pit. It wasn't particularly exciting. It was 18 years, 28,000 tons of cathode production, 300 million NPV, and I don't think it really, garnered the attention from the market. We subsequently grew the resource. We brought in Park Salyer, but it was an underground sub-level cave with higher capital, higher execution risk. The NPV went up to 500 million, an improvement, but still not of the size and scale that we really would excite the market. We brought in Newton, bringing in Rio Tinto as an investor, and I think it was all done with the best intention, but I added in another complexity to the story. And we know in the capital markets, the market likes something that's really simple, easy to understand. People don't have to invest a lot of time and effort into reviewing reams and reams and reams of document to understand these deals. And of course, picking up the Mainspring property was transformational because it took Park Salyer from an underground sub-level cave to an open pit with lower capital, lower operating costs, and it expanded the NPV by 400%. So now we're at a size and scale that's starting to garner that attention. And it's my belief that when we can come out with the PFS and we can duplicate the first 20 years of the PEA mine plan, provided all of these numbers can be substantiated with all of the quotes from the vendors and the suppliers. They're reasonable assumptions with productivity and development rates, and the market sees mineable reserves and a very robust PFS. This is why I think there's a re-rate coming, and this is why we've tried to simplify the PFS coming forward. So there's no primary sulfide in. We're not putting in the small underground component. There's no Newton in this plan at the moment. It's a pure standalone. One large new open pit known as Park Sailor, and a layback on an existing open pit using traditional heap leach SXEW technology.
Okay, that makes a lot of sense. But let's talk about Newton for a moment, because you've been working with Newton to test the viability of their leach technology. Newton has gone into production elsewhere, I think in Nevada with Gunnison. Where do things stand with your project and Newton, and whether it works?
Yeah, well, we're now conducting what we call the phase 2 column tests, which will be to pre-feasibility study level. Those all started up late last year down in Bundoora at their testing facility in Australia. We would anticipate that by the end of this calendar year, early 2026, we'll have the final results from those column tests. And then at Newton's election, they have to advise us to conduct what we call a Newton integrated PFS. So essentially, we would take our standalone PFS and we would layer in Newton on top of that with any additional capital, any additional operating costs, obviously increased recoveries on the secondary sulfide and the new primary sulfide, which would come into the plan. And if we're able to satisfy the financial triggers, i.e. we see a 20% uplift on the base case NPV, then at Newton's election, within 60 days, they have to advise us if they want to actually earn in on the project, potentially up to 40% at the asset level.
Now, you said it's at Newton's election to do the integrated PFS. Will they pay for that, or they decide to do it and then you pay for it?
Yep, if they ask us to do it, then it's covered under our costs. And of course, this was monies that we received from them several years ago when they initially, after their initial investment, they provided us with $33 million of non-dilutive financing. So this is why we will cover the cost of the integrated Newton PFS.
Now, let's talk a little bit more about Hudbay. They're a 9.9% shareholder in the company. Elsewhere in Arizona, early this year, they received the permits for their Copper World project, and in August they announced that Mitsubishi is going to partner with them on that development. Hudbay seems to be staying tight with you, and they're also it seems like they're looking to grow a substantial long-term copper production footprint in Arizona. What does this potentially mean for Arizona Sonoran?
Well, I think it's extremely positive, as I said earlier, with the check mark of validation and credibility with their investment. They're slightly more advanced than us in their technical studies. The projects have some similarities. They do have an observer on our technical committee, and there is a sharing of information. There's no point reinventing the wheel if we have similar challenges or we see similar opportunities. So far it's been a great partnership with them, and we're looking forward to further developing that as we go forward.
Now, Hudbay, the CEO of Hudbay, Peter Kaczynski, he communicated a long time ago that the company wanted a development partner for Copper World. They didn't want it to do it all on its own. They've very much got a partnership mindset in Arizona. Is that something potentially for you to sort of leverage and benefit from as you're looking to finance and develop Cactus, i.e. is Hudbay going to be a partner for you?
Yeah, look, I think provided we can deliver very credible technical reports and further de-risk the project, if they feel that they're comfortable with any future investment, I think there's definitely an opportunity for further increasing the partnership or the relationship with Hudbay, and we'd be delighted to have them on board, provided there's an accretive transaction for both sets of shareholders. Absolutely. I mean, I get asked all the time, what's your biggest risk right now? What keeps you awake at night? And I'm not concerned about the project permitting. We're a small company. We've got no producing assets. We don't generate any revenue. So project financing is going to be our biggest challenge in 2026. And if we have partners there who want to share in our success, share in the upside of the project, then I'm all ears and I'm open to working with them.
Okay. George, we've covered a lot of ground during our conversation, so maybe let's end with what you see as some of the key catalysts for the company that people should be watching out for over the next 12 months.
Yep, well, we've got a mineral resource estimate coming out very shortly. It'll be the foundation for the mineable reserves within the pre-feasibility study. As we touched on, in the next month, the pre-feasibility study will be coming to the market. We then begin the process of the final permits required to actually build and construct the mine. Those applications will be in to the various government, state government and municipal authorities early next year. And we would anticipate that by the summer of next year, early fall, we'll be in possession of the final permits required to actually build the mine. And that's at a point in time when the bankable feasibility study and the project financing will all be sort of coalescing. And then we're at a point in time when we can make a final investment decision in the fourth quarter of next year and start getting some shovels in the ground and moving this thing forward to production.
Excellent. Well, congratulations on a great year so far. George Ogilvie, thank you very much for joining us today.
Thank you, Paul.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek, Colorado. So stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.